Is going on YouTube? Brendan from Market Makers, your home for Wyckoff, Advanced Fibonacci, TA. Guys, welcome to the only show that is going to explain to you the macro market cycles, the equities markets, and how it ties into crypto as well, because everybody else just wants to give you a target. Bitcoin 12K, Bitcoin 200K. I'm going to explain to you exactly what's happening in the markets. Yesterday I was traveling, guys, so I didn't get a chance to update you, but the previous video I told you if the CPI comes in hot, expect everything to dump. The CPI came in at 8.6. The street was expecting 8.2. Everything dumped. Let's cover some of the big news headlines and let's jump into the markets. I'm going to combine today's show with the equities and with crypto as well. Obviously, it all matters with the inflation here in the USA. So let's go ahead and start this off, guys. So the Dow's falling 800 points. Obviously, the market's still open. It could end up slightly better, slightly lower. The Dow falls 800 points after inflation hits 40-year high. Consumer sentiment plummets. Consumer sentiment right now is lower than it was at the peak of COVID. The Dow just had its worst 11-week performance since the Great Depression. Guys, these things matter. I told you the CPI is rigged. It doesn't matter what that number says. Anybody that does grocery shopping understands the food, all the foods at the grocery store, the UN Food Index, the highest it's ever been. Everything is up 15 plus to 20%. Housing is up in Florida in some areas 40%, yet the CPI says housing's up 5 to 8%. So it's a rigged system, but even in a rigged system, you still have massive inflation, 8.6%. And I've mentioned this before, but it's worth mentioning again. If you took 1980, Paul Volcker, who everybody likes to talk about, comes in under President Reagan. Paul Volcker, we had 13.5% inflation. He raised rates to 20%. In 1 year. That year raised it to 20%. The markets crash. It set off a 40-year bull run recovery, by the way, after that. Markets crash. He got inflation under control by raising rates to 20%. That's called the Taylor rule. The Taylor rule is having to have rates higher than actual inflation. Right now, as we sit in the USA, our rate is 0.75. Inflation, according to the Fed, is 8.6. They can't get anywhere near that. They will crash the economy. The U.S. will not be able to service its own debt, 30 trillion plus in debt. We printed 25% of the money in circulation since the COVID crash. Okay, that's crazy when you think about that. 25%. This is why we have so much inflation, and inflation's working its way through the system. This is why they cannot get it under control. So what's happening in the markets right now is you're going to have the Fed have to reevaluate what they're doing. Now they're already debating it today because of this news. Will they go to 0.75? Will they just come out with a 100 basis point hike? Will they do that? I don't think they will. I think they're going to keep doing their 50 and inflation is going to keep going up. Because remember, my thesis is this is all about the haves and the have-nots. The top 10% of the country own almost 90% of the equities. Where do you think the politicians? Look at the companies that donate to politicians. Look at the individuals, the Bill Gates of the world, the Jeff Bezos that donate to politicians. These are the people they're protecting. The Fed exists to protect the rich and the wealthy. It doesn't exist to help you pay for your groceries, to help you pay for your gas, and to help you pay for your utilities. They don't care, okay? This is the system that we live in. And more, our country is becoming like some of the banana republic, failed republics, failed democracies in Latin America. And I know a lot of you share that similar view. Let's go ahead and talk about the market so you can see exactly what's happening. So as we said, the CPI comes in hot. Look what happens. The Nasdaq dumps, okay? The Nasdaq is down right now 3.35%, 412 points. The Russell is down. The Russell is down almost 3%, just shy. And the S&P, the broader market, that is down 2.66%. They're all off their session lows. Look for the velocity to potentially pick up towards the end of the day. Now, one thing you can see is they are all still in their Wyckoff accumulation zones, meaning they haven't fallen out yet. If they fall out, guys, this is where I anticipate Bitcoin could capitulate and really come down to some new lows. If they fall out, if they lose key support levels, right now Bitcoin is holding up pretty well. Let's go ahead and look at the daily time frame. You can see Bitcoin, of course, sold off like everything else did. You don't want to lose what is this, 28.1, 28.2. You don't want to lose that. If you do, you have that 25.5, and if you lose that, you could potentially come much lower, okay? So that's what we're looking at. I think for these markets, if they can hold up in their accumulation zones where they have been, the Russell's just at the top of its accumulation zone still, okay? If they can hold up in these zones, Bitcoin will just, it's still going down a little bit, but it'll be able to hold some of its strength. If these start capitulating through these zones, remember, these would be going down to new lows. These would be going down to new lows. So that would pull Bitcoin down as well, especially the Nasdaq, as you can see, okay? Because these new lows would be much lower. And the 45 angle on a lot of these markets is beneath them. And my overall target for the S&P is 2350. When this thing is fully done and has run its course, the S&P is going to enter a bear market if it comes back down to this previous candle, which is at about 3805. It's at 3914. So right now you have the Nasdaq in a bear market, Russell in a bear market, crypto in a bear market. The S&P will come down to the next level. Sorry, the Discord's popping off here at the same time. We got a lot of things going on. Let me go ahead and close that. And the S&P will come down to the next level if it can't hold its support, guys. And if the S&P enters a bear market, it's just a matter of time. But as you guys know, macro market cycles here, we're talking about trading in a bubble, the largest bubble in U.S. history. We have a bubble in equities, a bubble in bonds, a bubble in housing. People say, what do you mean a bubble in housing? The housing market right now versus median household income required to buy a house is higher than it was in 2008. Okay, and of course we have the crypto bubble, the parabolic 1600% rise, almost twice what it was from the previous bull run. Everything is in a bubble, therefore everything could be catastrophic when that bubble pops and you start to see this. We have to hope it just legs down as it is, right? Because that's a softer landing. If this thing just capitulates and falls apart, you're going to see mass layoffs. If you listen to Ray Dalio, if you listen to Jeremy Grantham, two billionaire fund managers, they talk about Great Depression. They talk about stagflation like the 1970s. I wasn't even born yet. I was a baby in 78. Most of you watching weren't born yet, but stagflation, very high rates, very weak dollar, like lots of bad things can happen. So it's very important to be paying attention to what's happening in the marketplace. And right now with crypto, it is holding on for dear life. Now here on the weekly, as you can see, on the weekly, everything is still okay. Okay. I mean, yes, we're coming down. Everything, even though the markets are selling off, even though there's lots of fear, and that Fed meeting is coming up, guys, the 14th, 15th. And if they change the rates that they're going to raise, if they go above 0.5 and they go to 0.75 or 1.0 for a rate hike, everything is going to go down. Everything will massively sell off. That's just the way that it is. So just be aware of that. Everything I tell you is with that caveat of not knowing what the Fed is going to do. Now, a lot of people think they're going to stick with their 0.5 and just say live with the very high inflation, but the next month's inflation number could easily come in higher. So much for that narrative of peak inflation. Everybody over the last month has been saying peak inflation, peak inflation. I think inflation's peaked. Well, A, you don't measure it correctly. And B, if you did measure it correctly, you'd know inflation's somewhere between 15 and 20% on everything. And like I said, everybody that grocery shops, buys anything is well aware of that. So let's look at Bitcoin. Again, you don't want to lose this 28.2. You lose that 28.2 and you come down, you're going to have the ability to range down even lower into the high 19s, low 20s. If you are not caught by that previous demand area of 25,338, you can easily fall back down. And on the weekly, guys, you have your 200 and 233. Your 233 is right about 24.6, 24.7, and your 200 is right about 22,350. Okay, so if you don't hold on these levels, then they are resistance. If you get below this, okay, if you get below 22, this is now resistance. And again, you could be coming down further to a deeper level. And like I told you guys, at the end of the day, not literally today, but the end of all this, I anticipate a sub 10K Bitcoin. My pattern ends at 10,591. I've played other people for you like Guggenheim investment partners talking about 8K Bitcoin. I think it's an extremely high possibility that will eventually happen. We can still wave up lots of different factors, guys. Like I said, bear markets, you get the biggest up days in bear markets historically. So we have to see how this plays out. Let's go ahead and flip through some indicators, and then I want to get this video uploaded because I know a lot of people are asking for it. Let's look at our Ichi The daily, I mean, the daily is just more resistance. We're still holding our range here. And again, we need to hold this cross section. If we start meeting resistance here, June 13th, got to watch June 13th, guys. 14th, 15th is the Fed. You start meeting resistance here, June 13th, and you start falling down to this range. What I don't want to have happen is the candle come below this range, and this is all resistance now. This is resistance, and this is how you can exit to a lower trading range over and over again, okay? So you have to be very careful here. You need to break resistance, come through, and you have more upside. You still have a thinner cloud in this area because of all the accumulation we have been doing. And if we go to the 8-hour time frame, again, this has been tracking so beautifully. I love showing you the 8-hour time frame. You can see, we were tracking beautifully to our Gann fan. Again, go back to last Saturday's video if you guys want to learn how to do this. That is published there on YouTube for free. You can watch it. And we're tracking beautifully here. And again, this is that 28.2 number. We don't want to come below. Now, the good thing is this is an ascending angle, so it does provide support. When you do break through a fan support like this, you do have a bias to come test the other side of it, okay? You see it all the time here. You fall through it here, you come test it here. This happens over and over again, so just be aware of that you can come lower here, and that number again is going to be 28.2. This is an ascending angle, so just be very well aware of that. And let's go ahead and look at our cloud here and everything on the 8-hour as well. 8-hour, I mean, what a missed opportunity. Look how weak that was. The pivot right there between the Kumo twist of red and green. And again, we almost were able to punch through it, and the CPI number came out. Now, this is still a very thin cloud. If you can trade in this range, you can still punch through it, still get some more upside. But guys, all of these ranges, keep in mind when we're talking about trades, just like we were talking about buying these lows, right? All of these trades, you have to keep your mindset that the upswing isn't always going to be that strong. In a descending macro downtrend, a primary downtrend, your big money swings will be at failures, okay? There will be failures that fall. That will be your big money. Now, right now, we're still in this defined trading range with very defined resistance levels, okay? So we're in this tight area. Eventually, if Bitcoin does capitulate below this 45, you could see much deeper retracement down, like we said, to 25, down to 22 if those weekly supports don't hold, and then you're below it. So just be well aware of that when you're looking at trading strategies. And here on the 4-hour time frame, again, this is a further wave projection for the upside. I mean, it's just ugly, right? You have your high from your defined trading range. If you look at it in reverse here, your high, your lower high, your lower high, and now you made another lower high. So, and again, you're trying to find support here, come back up. If you end up finding this 200 again as resistance, then you've just made another lower high all along the 200, and eventually that bias, if you crack that 45, this 1-1 angle, okay, that's the 45 in Gann. If you laid out the correct way that I showed you in the video, if you crack that 45, you are in a bearish price trend. That becomes resistance, and your bias is to more downside, okay? So just be aware of that, guys. I'm going to go ahead and put this video out there because it's an important update. Understand what's happening in these markets. I may even do another video after these markets to see how they wrap up. I have it on in front of me because we could see some type of whipsaw at close, or we could just see further rocket propulsion to the downside, okay? So I'll update you guys in one fashion or another. Stay tuned for more videos, guys. Check out the join button for our Discord room right underneath this video. Obviously, check out BITGET, check out SimpleFX. Everything is going to be in the video description for you. I didn't plug it in the beginning, so hopefully you watch it to the end. All right, guys, take care. Happy trading.